In today's video, we're going to discuss why I dumped $100,000 worth of Roundhill funds. Roundhill helps us earn over $500,000 per year in dividends. Yes, we got this number back up to over $500,000 in dividends, and we're outperforming the markets with our approach using margin. Okay, we're up 33% for the year. The S&P is up 21, the Nasdaq's up 21, the Dow's up 13, and the Russell's up 10. So we're beating all of the indexes, even with margin, using Yieldmax, Cornerstone, Defiance, and Roundhill funds. And on a daily basis today, we're down 0.12, which, as you can see above, beat the S&P and the Dow Jones. So even with margin, okay, even with over 400 grand in margin debt, we're still beating the indexes, living free from a 9-to-5. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. I have 5 reasons why I dumped $100,000 worth of Roundhill funds, and we're going to get into that right now. So with this move that I made, okay, dumping $100,000 worth of Roundhill funds, we raised our available withdrawal from $230 to $253. We got our dividends up from $480 to over $500,000 now. And we took our debt and lowered it from $430 to $411. How did we do this? Well, first of all, Cornerstone is outperforming the markets right now, and you have to take note because Cornerstone's premiums are rising, okay? Cornerstone's a 4-star fund, and it has high premiums, okay? 19% premiums, which is nothing to scoff at now, all right? Now you can drip the 21% dividend in Cornerstone down at the NAV for 19% gains in CRF. And then with CLM, we have 7% premiums here for CLM. So the premiums are starting to rise, and it makes more sense to hold Cornerstone and get out of Roundhill because now the 21% dividend is competitive with Roundhill, okay? Cornerstone has a 21% dividend. XETE has an 18.5% dividend, okay? Cornerstone sets its 21% dividend down at the NAV. So when you drip that 21% dividend, it's down at the NAV for a 21% dividend. Right now, the dividend yield for Cornerstone might be around 15%, but again, it's dripping that dividend down at the NAV for a 21% yield, plus you get the NAV gains, okay? You get these 18% gains as you drip the 21% dividend for Cornerstone, okay? 19% gains there after I refresh the screen. So it's not really paying me to be in Roundhill right now because Roundhill has higher maintenance and it has lower premiums, and it doesn't have this special drip that Cornerstone has, okay? So Roundhill XDTE, you can see that it is 50% maintenance, okay? Whereas Cornerstone is 30% maintenance, all right? So Cornerstone, 30% maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. So Cornerstone is fully indexed like Roundhill, but it has lower maintenance, it has a similar yield, and it drips that yield down at the NAV for that free money every month. Okay, that's too hard to pass up right now because the premiums are growing as I just showed you. So you're just leaving free money on the table when you're not dripping Cornerstone. And then Cornerstone takes up less equity, okay? Cornerstone is 30% maintenance, Roundhill is 50% maintenance. You can go to other brokers with lower maintenance, but they might not have the special drip for Cornerstone. Only a few brokers carry Cornerstone and its special drip ability, okay? So please keep that in mind. Cornerstone has bigger premium potential than Roundhill. As I've showed you in past videos, Cornerstone made it back to its old highs, as you can see here on a 1-year chart, and this is the growth fund for Cornerstone. We have CRF, which is the growth fund, and then you have CLM, which is the value fund. These funds are making it back to their old highs, even to new highs, but Roundhill hasn't made it back to the old highs. QDTE is not back at those old highs, nowhere near in fact, and it doesn't have enough of a dividend anymore for me to say that I'm going to just be in Roundhill now. And wherever QDTE is beating Cornerstone as far as yields go, well, Cornerstone's keeping its NAV better, so you're getting better price performance with Cornerstone, so it's all evening out with Cornerstone as far as total returns go. But Cornerstone has lower maintenance and it has the special drip at NAV ability. So why would I put all my money in Roundhill when I can preserve 20% more equity with Cornerstone because it's 30% maintenance versus Roundhill's 50% maintenance? I get the special drip at NAV and I get better days gains abilities with Cornerstone, okay? Better price performance with Cornerstone. Cornerstone also fell less than Roundhill funds, so I like the protection that Cornerstone gives me. Okay, with the proceeds of selling $100,000 out of Roundhill funds, I bought more Defiance because Defiance has 30% maintenance as well, and it has more qualifying income for me, okay? So yes, Defiance goes sideways to down on its chart, as you can see here. Many people get freaked out by this, But if you go to a Morningstar chart of Defiance, you'll see that actually Defiance is doing very well. It's outperforming the indexes, okay? Take IWMY, for example. It's doing very well. It's outperforming its index. So I like Defiance because Defiance has lower maintenance than Roundhill, and Defiance has higher dividend yields, which gives me more qualifying income to banks for loans. See, QQY, we have 30% maintenance here, and then when we sell naked options on QQY, it's 20% maintenance, okay? So I've always maintained here at my channel that you have to sell options to get more growth, because you can't just live out of Roundhill, Defiance, and Yieldmax dividends, because they fall by the amount of their dividends, okay? They decay on their charts, so you have to get growth. That's why I'm always pushing Cornerstone, and that's why I'm always pushing selling options, okay? Because selling options is a low risk way to get your growth, all right? When you sell options, you lower your risk, you lower your maintenance, you lower your volatility. And with QQY, we have some options on this. Okay, we sold some put options on QQY. We lowered our margin debt by about $8,500 in the process. Okay, so we lowered our risk, we lowered our margin debt, and we also get performance. Okay, we're actually up $200 in QQY. Even though this fund declines over time and goes sideways to down, we're still getting performance nonetheless from our sold options. Okay, so you have to put all these things together, your sold options, your other dividend vehicles, even blue chip stocks like I always recommend. You need to have a total approach to get growth in your account. That way you can offset the erosion from Yieldmax, Defiance, and Roundhill. And if you don't want to buy all these stocks, well then I suggest you get your growth from Cornerstone, because what other index play exists that has a 21% dividend and it drips it down at the for free money every month? Also, you can level up your account with Cornerstone, okay? You can actually grow your account a lot faster through Cornerstone because it has rights offerings, okay? If you go to a chart of CRF, you'll see that on a 1-year chart, it goes upward left to right, which is really great. I mean, this is beating everything that I know of right now at the moment. But on a 10-year chart, you'll see that Cornerstone moves sideways to down. That's because you have to factor back in dividends, drips, and rights offerings. Cornerstone has rights offerings just like many other closed-end funds. Cornerstone's no different. Except with rights offerings, you can level up your account significantly because they tell you when to sell and they tell you when to buy. So you could pocket the 20% premiums from Cornerstone, you could pocket the 20% dividend and the NAV drips, and then you reset your gains when the rights offering is over, okay? When you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. We have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle, so whatever questions you have about your brokerage account, someone here most likely can answer if I can't. Also, we're all on top of this Cornerstone rights offering announcement together, all right? Because again, that's how you really level up your account. If you need help playing Cornerstone, that's in my Volume 4 e-guide. All right, another reason why I dumped 100K Roundhill is because the market's back at the highs. If you go look at a chart of SPY, you'll see that, again, it's back at the highs. So I'm managing risk, and Roundhill will usually fall in line with the market, okay? But Defiance falls less than the market on down days. So I'm sort of managing risk at these highs, selling higher maintenance names like Roundhill and even some Yieldmax. And then I'm buying more Defiance funds because they have low maintenance and they fall less on down days. I would buy more Cornerstone right here, but Cornerstone is elevated. It's back at the highs, as I've showed you in past charts. So I actually took the liberty to box Cornerstone. Okay, I sold some Cornerstone short. I sell shorts on Cornerstone not only because they protect my portfolio, because Cornerstone is indexed and a rising tide raises all ships, a falling tide lowers all ships. So when I short Cornerstone, I'm actually hedging my entire portfolio with a glorified married put. Also, when I box Cornerstone, it lowers my maintenance to 5%, as you can see here. So when the market's back up at the highs, as you're seeing now on its charts, I like to box Cornerstone, protect my account, and that also raises my available withdrawal, okay? If you need help boxing Cornerstone, that's in my Volume 5 e-guide. So I box Cornerstone, protect the rest of my account, raise precious available withdrawal, which then gives me more money that I can withdraw out from if I need to pay my bills. All right, so in order to live free from 9 to 5, you have to be able to withstand over 20% corrections in the market. We can withstand over 20% corrections, especially now that we sold some Roundhill today. We dumped 100K of Roundhill, which raised 50,000 worth of available withdrawal, and then I reinvested that back into Defiance, which then kept my available withdrawal high because Defiance is lower maintenance than Roundhill. All right, so this is a very special trick. I hope you all appreciate this knowledge that I'm giving you here at this channel. So boxing Cornerstone helped me lower my maintenance, raise my available withdrawal, and manage risk in my portfolio, since Cornerstone is the indexes, and if the indexes begin to fall because we're at the highs, well, now I've sold short Cornerstone, and that will protect me some from the downside. I also buy put options to hedge my account in the event of a market crash. And so I always say we can withstand over 20% corrections, but if we were to have a 30% correction overnight, we would make more money than we potentially lost in our put options. If you need help insuring your portfolio like I do with put options, that's also in my Volume 5 e-guide along with Boxing Cornerstone. Of course, I buy options for insurance and then I sell these options to lower my risk, lower my margin, and actually get more performance in the process. As you can see here by my daily gains, we made about $373 today just from closing my NVIDIA put. Okay, so NVIDIA, we sold options on NVIDIA. That's how we manage risk with Yieldmax. And as you can see here, I closed my NVIDIA puts. We received a nice profit on this as a result, and that's why selling puts is so lucrative. All you have to do is sell time, sell volatility, and you're going to come out ahead in the long run. And if we fall and we go below our strike prices and our cost basis where we do these puts at, then we get a sign at the lows. That's how we really make more money on the upside. Okay, you want to sell options to not only lower your risk, lower your margin, get more performance, but if you're wrong on your option and we actually go lower than your cost basis with your sold option, once again, you get a sign at those levels, and then you make a lot more money on the flip side when stocks go higher again. So I like to sell options for growth. All right, I like to buy Cornerstone for growth, and then I had Roundhill for my growth, but Roundhill wasn't growing as much as Cornerstone. It has too high of maintenance, and it doesn't have the special drip for Cornerstone. So when I bought more Defiance, I'm still going to get more performance from Defiance because we're using margin. It's just that Defiance won't move up as much as Cornerstone on an up day, but it moves down less than the market on down days, both Cornerstone and Defiance. That's why I made this move away from Roundhill. All right, so again, I hope you're appreciating these videos. We're up 33% for the year using this approach with margin, Cornerstone, Yieldmax, Defiance, and Roundhill funds. If you need help living financially free from a 9 to 5, email me for my e-guides at aikandtodd48@gmail.com. Also, if you like this video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.